And we are live. Good morning, good afternoon, and good evening to everyone tuning in around the world. Welcome back to the Daily Crypto Market Podcast. This is Merif, and as always, I'm joined by the man who crunches the numbers so you don't have to, Cooper. Coop, it is Wednesday, July 9th, 2025, and while the market is giving us a lot to talk about today, it feels like we're right on the edge of something big.
It certainly does, Merif. It's great to be here. That feeling of being on a knife's edge is palpable across the board. There's a lot of tension building up, both on the charts and in the broader economic landscape. But before we dive into that, let's get our usual housekeeping out of the way. Nothing we discuss here today constitutes financial advice. This is purely for informational and educational purposes. Please always do your own research before making any investment decisions.
Absolutely. Your keys, your crypto, your responsibility. Alright, disclaimer done. So Coop, let's get right to it. Give me the 50,000-foot view. What's the mood music in the market today? Are we feeling positive, negative, or just stuck?
The overall sentiment, based on our indicators and the general flow of capital, is still officially bullish. It's a cautious bullishness, mind you, not the euphoric, face-ripping rally kind of bullish. It's more of a calculated optimism, recognizing the strength we're seeing but also acknowledging some very significant walls we need to break through.
Cautious bullishness. I like that. It sounds mature. So let's put some numbers to the feeling. I'll run through the majors right now. We are looking at Bitcoin, and this is the big one, sitting squarely at $109,000. That's BTC at $109,000. Ethereum is trading at $2,617. Solana is holding at $152.10. And XRP is showing some real strength at $2.313, so about $2.31.
That's a perfect snapshot, Murph. And each of those prices tells a different part of the same story. Bitcoin is the main character, obviously, but the subplots with the alts are just as fascinating right now.
Okay, let's start with the main character then. Bitcoin at $109. It feels like we've been knocking on the door of this $110 level for a little while now. We get close, we get rejected. What happened overnight that brought us right back to the ski point?
Well, the interesting part happened during the Asian session, and it ties directly into the macro environment. We saw some pretty intimidating headlines about new international trade tariffs being discussed. Typically, that kind of news can spook risk on assets, and crypto is definitely a risk on asset. The bears were probably expecting a significant dump.
Right, tariff talk usually means markets go down. People get scared, they sell things that are considered risky.
Exactly. But that's not what happened. Bitcoin did dip, but it held the critical support level at $108,000. It didn't just hold it, it bounced off it, and bounced hard. Seeing that strength, that resilience in the face of negative macro news, is a very powerful signal. It tells you there are buyers waiting, ready to absorb any selling pressure. That strong bounce in Asia set the tone for the European and now the US Open.
And how are the traditional markets reacting? Because crypto doesn't live in a vacuum.
It certainly doesn't. And right now, US equities are trading pretty much flat this morning. There's no panic, but there's no major rally either. This suggests a broader wait and see approach from big money. The risk appetite is there, it hasn't vanished but is being held in check. Investors are looking ahead and they know what's coming later this week.
Okay, so that brings us to the technical side of things. We bounced off support, but we seem to be hitting our head on a ceiling. Why can't we just punch through $110,000 and get on with it? What's the technical barrier here?
You've hit on the key dynamic of the market right now, Murph. That resistance zone between $109,000 and $110,000 is proving to be incredibly formidable. And the reason for that, according to on-chain data, is significant whale selling pressure.
Oh, the whales. So the big players are taking profits every time we get close to that level. Break that down for us. What does that look like?
It means large, long-term holders entities with thousands of Bitcoin have placed substantial sell orders in that price range. Every time the price ticks up towards $110, these automated orders trigger, flooding the market with enough supply to push the price back down. It's like trying to push a beach ball underwater. As soon as you let up, it pops right back to the surface. In this case, the whales are the ones pushing down.
And you said this is similar to trends we've seen before?
Yes, very similar. We saw this exact pattern play out at previous key psychological levels last year. It's a classic consolidation and distribution phase. Whales who bought in much lower are risking and taking some profit off the table, while new waves of buyers are trying to push the price to the next leg up. It becomes a battle of attrition. The question is, who has more conviction and capital, the sellers at $110 or the buyers at $108?
A battle of titans. I love it. So, while Bitcoin fights its battle, let's look at the lieutenants. Ethereum, sitting at $26.17. Honestly, Coop, with Bitcoin over 100 grand, that feels a little over ETH, doesn't it? The ETH/BTC ratio must be taking a beating.
It is. Ethereum is definitely lagging. This is a classic sign of a market that's very Bitcoin focused. When there's uncertainty, capital tends to consolidate into the safest, most established asset in the crypto space, which is Bitcoin. Money flows out of altcoins and into BTC. So, ETH's price action right now is less about Ethereum itself and more about where institutional capital feels safest. If, and it's a big if, Bitcoin can decisively break that $110 resistance and start heading for $120, I would expect a wave of catch-up capital to flow aggressively back into Ethereum. But for now, it's waiting for the general to lead the charge.
Okay, so ETH is waiting for permission from King Bitcoin. What about Solana? $152. It's been a powerhouse, but it feels like it's been chopping around this $150 minus $160 range for a bit. Is it a similar story to Ethereum?
Similar, but with a twist. Solana at $152 is actually showing a fair bit of relative strength. While ETH is lagging, SOL is holding its ground quite firmly. It's building a very strong base of support around this level. Think of it this way, if Bitcoin were to see a sharp rejection from $110 and fall back to, say, $105, you might see ETH drop more significantly on a percentage basis than Solana. The SOL ecosystem continues to attract developer and user activity, which provides a fundamental support that is somewhat decoupled from the pure beta play on Bitcoin. It's carving out its own territory.
Fascinating. So it's holding its own better than ETH on a relative basis. Now for the surprise of the day, for me at least. XRP at $2.31. That's a very, very strong move. In a market that feels like it's holding its breath, XRP looks like it's sprinting. What is going on there?
XRP is the outlier today, and it's a great example of how asset-specific narratives can sometimes override the broader market trend. While we don't have a single confirmed catalyst, a move like this is often driven by a confluence of factors. It could be renewed optimism around the final stages of their legal battles, rumours of a new partnership, or simply a large player deciding to build a position. At over $2, it has cleared several key resistance levels, and that often creates a FOMO effect, where traders who were on the sidelines jump in, pushing the price even higher. It's a technical breakout fueled by a narrative, and it's managed to decouple, at least for now, from Bitcoin's sideways grind.
Wow. So while the rest of the market is in a staring contest, XRP decided to just get up and leave the room. It'll be interesting to see if it can hold those gains. Okay, so looking ahead, Coop. You mentioned investors are in a wait-and-see mode. What are they waiting for?
Two major things are on everyone's radar for the coming week. The first is the CPI data release. The Consumer Price Index is the U.S. government's primary measure of inflation. That number will heavily influence the Federal Reserve's next move on interest rates. Higher than expected inflation could lead to a more hawkish stance, which is typically bad for risk assets like crypto. Lower than expected inflation could be the green light the market is desperate for.
So the entire market is basically holding its breath for an inflation report. What's the second thing?
The second is the continued debate and potential movement on several crypto regulation bills in Congress. We're hearing whispers that a comprehensive bill might be moving closer to a vote. Positive regulatory clarity would be massively bullish for the space, as it would give large, conservative institutions the framework they need to enter the market in a much bigger way. Conversely, any negative or restrictive language in those bills could have the opposite effect.
So we have a macro data catalyst with CPI and a fundamental industry catalyst with the crypto bills. That's a potent cocktail for volatility. Given all of that, the WHALES, the macro data, the regulatory questions, how do you wrap up your forward-looking statement? You said we're maintaining a slightly bullish view. Why?
We're maintaining that view because of the market's resilience. The fact that Bitcoin absorbed the bad tariff news and held $108 is, in my view, the most important signal of the last 24 hours. It shows underlying strength and a high demand floor. While the whale resistance at $110 is real, those sell walls will eventually be exhausted if the buying pressure continues. So our thesis is that the path of least resistance is slowly, but surely, shifting to the upside. We're cautious, but we believe the bulls still have the upper hand, pending any major surprises from the CPI or Washington.
There you have it, folks. A resilient market, a Bitcoin battle at a key resistance, and a huge week ahead for data and regulation. Cooper, amazing insights as always. Thank you for breaking it all down.
My pleasure, Murph. It's a fascinating time to be watching this space.
It absolutely is. And that's all the time we have for today. We will be back tomorrow to dissect all the action. Make sure you are subscribed so you don't miss it. Like the video, leave a comment with your thoughts below. What are you watching? Are you bullish or bearish? Let us know. Until next time, trade smart, everyone.